Hi there. Welcome to episode 3 of Sea Lawyer Station. My name is Jose Mallari. I will be joined today by Jude Stephen. He is a licensed real estate agent in California. He and I will talk about the home buying process. If you find value from this episode, please hit the subscribe button. I will greatly appreciate it. Meanwhile, sit back, relax, and enjoy watching. Brief life story.
Absolutely. So I was born and raised here in San Diego, California, and real estate wasn't my first option. As a person from Asian descent, my parents are like engineer, doctor, lawyer, and so I didn't become an engineer, I didn't become a doctor, I didn't become a lawyer, but I loved finances, and so I loved finances, and I did love engineering, but it's very time consuming. So when I went into school, into college, I decided I want to go to finance. My degree was finance, real estate, and law, and also picked up computer science because it was big at that time. But the amount of time that it involved in taking classes in programming, I was there all night. So I switched my major to management information systems, which was more in line with a business degree. And so that's where I was kind of going. And then I wanted to fly jets. Out of nowhere, I wanted to fly jets. And the school I was at Long Beach State, they only had Army ROTC, and you only fly helicopters in the Army. So I enrolled in Loyola Marymount University in LA at the same time, and I joined Air Force ROTC. So I was going to LA on Fridays, and then the rest of the week I was in Long Beach. And I went through the whole process, and I signed up, but I did my exam, my physical exam, and my eyesight is in 2020, so you can't fly jets in the Air Force if your eyesight is in 2020, and so, or you get it corrected. And so the best position that I saw that was available to me, as I was already signed under contract, was an accounting position. And for an accounting position, you need an accounting degree. So I decided to take up accountancy as well. So I majored in finance, real estate, and law, management information systems, and then I took up accountancy. And if you're an accountant, a good way to go if you want to build a good foundation is have your certified public accountant license in the state that you want to work, so CPA. So I did that, and while I was in college, I have to do like an internship. And so there's a real estate brokerage next to me, and that's what I kind of went under, and I took that, and I did that for about a couple months, and was very interested in real estate. Since then, I've been always really interested in real estate, but for some reason, my pathway didn't take me there. But more recently, about 3 years ago, I was in the sheriff's department working there, and I was in a mentorship program. And there, they brought on a few people from the community, business owners, and one of them was a real estate agent. And so I kind of went under his wing. I reached out to him, and I was like, hey, would you be willing to be my mentor? Not in the real estate aspect, but just a mentor in general, because I looked up to him. He, at that time, Mark Powell, great guy, he at that time was working with the San Diego Association of Realtors. He was on their board. He served as their acting president. He's also involved with like the state level organizations in real estate. And so he took me under his wing, walked me through it, got my license, and that was it, kind of fell into my lap, and I took advantage of it. And so opportunities present itself, but if you're not ready for them, they'll pass you by. So this opportunity, I was ready for it, and that's how I got into real estate.
Oh, good. That's good to know. But sounds to me you're a numbers guy. So did you ever think about getting into MLO, the mortgage loan officer path?
So it is interesting, but I like working directly with people, and it's definitely something good to know as a real estate agent. But I enjoy the interaction with someone, hands-on, helping someone get something that they've been working so long for, one of their biggest purchases, if not their biggest purchase in their lifetime, and to see someone, from the start and to get the keys in their hands, it's an amazing feeling.
I know. Yeah, I know that feeling. It just feels good
It
as
feels
an
great.
agent. Yeah, it's like you're
Right.
part of that family.
The American dream.
Yeah. So, yeah, I agree. Good. Thank you for that. And before I proceed again, I'd like to give you my humble token of
Oh, thank you.
appreciation.
I appreciate that.
Chocolate candies. So,
Very nice.
yeah. Going back to real estate, what do you see is the big trend in real estate, in the real estate market in California?
Well, the big trend I see is big companies, conglomerates buying up real estate, BlackRock and such, buying up a lot of single-family homes, multifamily homes, which
Mhm.
makes it difficult for the average person like me and you to buy a home because there's less homes on the market. And then also there's not enough homes on the market because we haven't built enough homes over the last decade or two. And so that makes it kind of tight. Also, the interest rates, they've been kind of high from what we're used to. And recently in the last week, they have dropped a little bit, about 0.25% or so. But because home prices are so high, 7% makes your monthly mortgage payment high, whereas 30 years ago when home prices were maybe 100, 200, 300 maybe, a 7% interest wasn't as big as an effect on your monthly expenses. So you have to think it's kind of doubled or tripled in a sense. But what I've noticed recently is that it's become more of a seller's market in the last few months. I mean, I'm sorry, I take that back, a buyer's market. It was a seller's market for the last few years, and it's transitioning into a buyer's market. And what that means is there's less homes that are moving and selling, and so they're sitting on the market longer. And so buyers have an opportunity to negotiate a little bit more, whereas like during COVID, homes are selling 20,000, 50,000, 100, 200,000 over asking because there's so many buyers on the market wanting that same property. Now homes are sitting on the market 30 days, 60 days, maybe even 90 days, not selling because, the average person doesn't have like $5,000, $10,000 sitting, $15,000 sitting just, to spend on a mortgage, whereas they have all these other bills, rent, and so I see it becoming more of a buyer's market because homes are sitting more on the market and buyers have a little bit more opportunity to negotiate. It is a little different market in San Diego because home prices are so high, Southern California in general, but I do see it as a buyer's market at the moment.
That's good. Now, in your opinion, how is technology such as AI, artificial intelligence, and virtual tours, how does that change the way people buy or sell homes?
Well, it's interesting that you say that because AI technology in general and the internet allows the average person not to need a realtor to say, and they could go see a home, right? They could do a virtual tour. They could kind of do a lot without having to go on site. A lot of people actually do buy from out of state and don't even see the property, right? And they buy it because they do all these virtual tours and they get an idea of what the property looks like. And that is useful. It is a useful tool, and I do say to use technology. But you can only do so much with technology. When it comes to the purchasing part, currently in our environment, you do need a real estate agent to make that purchase if you're going to be going through the traditional means of purchasing property. And when you do that, even if you get your own property or you go through a seller's agent to buy, which is called a dual agency, where one agent represents both the seller and the buyer, I do advise on getting a real estate agent to represent you because there's knowledge and experience that a real estate agent brings that you may not have as a person of society that's not a real estate agent, it's a buyer or a seller. Like most people wouldn't go to court if they're not a lawyer, right, and represent themselves. Most people don't do their own taxes if they're not certified. Same thing with a real estate agent and buying a home or selling a home, similar principles.
What is the going rate in compensating an agent, either buyer or seller?
So that's negotiable. So it's always been negotiable, but in recent laws that have passed, it's required now to sign a buyer representation agreement with the and with the seller, but with a buyer representation agreement with the buyer. It's required to sign that document before you do any real estate transactions with a client. And that means if you're gonna go show a home, before you could go show a home to a buyer, you have to get this agreement signed that goes through all the agreements of the contract, which includes the amount that the buyer is going to pay the buyer's agent. And so it's always negotiable. I think it's whatever the agent and the buyer want to agree on. But me personally, I do a range depending. My average is 2.5% that I put on there. And depending on the buyer and their situation, I'll lower it, you know, because my goal is to get the buyer a home. And if I could lower my profit, I'm gonna do that because I want them to get the home, I want to sell. If they don't buy a home, I don't get paid, right? So that's the main thing.
Okay. So did it change where previously the seller pays the buyer's agent indirectly? Is there a change?
So previously how it kind of worked was the seller would pay the seller's agent.
Right.
And from that, the seller's agent would distribute the buyer's agent's portion of the payments to the agents.
Which was known as CBB, or cooperating brokers, buyer's broker agreement.
So the thing about that situation is that was still written down, like how much each agent would get.
Okay.
The percentage. So it wasn't like it wasn't said.
Okay.
But if you think about it, the buyer takes out a loan to pay for the mortgage, right? That loan amount pays off the seller, right? The seller's proceeds of selling the home. From those seller's proceeds, the seller takes a percentage out and pays the agent. So it's always worked that way. It's still working that way.
Okay.
The only caveat now is usually when I do an offer to the seller, I put in there a request because all the offers from the buyer essentially. I'm just kind of the broker between them. So we put in a request for the seller to cover my percentage that I'm going to be paid. And in the case that the seller doesn't agree or they maybe make it less, I have a separate agreement, that buyer representation agreement with the buyer of a certain percentage. And so whatever the seller doesn't cover, the buyer would be obligated to cover. And they're aware of it, they sign it, and they don't have to sign it, but it's a negotiation. So whatever myself and the buyer agrees to, that's what's on the buyer representation agreement. And whatever offer the buyer gives to the seller and the seller accepts or negotiate, if there's a counter offer, then the buyer is obligated for any amount that the seller doesn't cover.
Okay.
Agreement.
Yeah.
But it's always pretty much been the
Same ultimate effect.
situation.
Yeah. Okay. Got it.
It's a lot clearer because
Yeah.
there's that buyer representation agreement,
Yeah.
but it's always pretty much been the same.
Now, for this episode, can we focus on the home buying process?
Absolutely. I actually wanted to talk a little bit about that. And so a quick recap of the buying process is the first thing you want to do is you want to get pre-approved or pre-qualified with the loan officer, because that gives you an idea of how much your maximum amount is that you qualify for, what your maximum monthly mortgage payment could be. And when you do that, the loan officer takes into account your monthly expenses, your credit card bills, your gas bills, your auto loan if you have one, and accounting for that, they give you a maximum amount of what you should be able to afford every month, including all your other expenses.
Mhm.
So you don't want to think, oh, this is all that I could afford, and I have to take into account all the other expenses as well in this amount. And then, so once you get pre-qualified, you can start looking for homes in that range. Now, I don't recommend buying the home at the maximum amount because it's going to kind of pull you thin on your finances, and you're going to be having to do a lot more budgeting, a lot less fun, right? But if there's a home that you really like at your top, you know, I wouldn't say don't do it, but definitely consult with your real estate agent. But once you get qualified, you know how much you can afford, work with your realtor to look for a home in that range that meets your needs. Think about home, housing, environment. You want to think about the community in a sense. Schools are an important thing for a lot of families. Then you want to think about the drive, the commute to work. You know, those are some of the key aspects of a home that you want to think about. Once you find a home, then there's the offer process, right? You work with your realtor to put in an offer on the home. My thought, and a lot of thought for a lot of realtors when I speak to them, is if a buyer really likes the home, you want to put your best foot forward. Everyone wants to save a buck, right? So $20,000 less, 30,000, 50, you know, anything is great. But if you really like a home, you don't want to lose it over $10,000, $20,000, because if you think about it, $10,000 or $20,000, $50,000 is only a couple $100 on a monthly mortgage.
Payment, right? And the payment.
Yeah, for the payment, it's only a couple hundred. I know it seems like a lot when you're paying it out, you know, and when you're putting the offer in. But if you could afford it and you really love the home, I personally would put my best foot forward. And what that means is don't lowball an offer, because you don't want to offend the seller as well. You offend the seller, they won't even look at your offer. You want to negotiate with the seller and try to get the best deal, of course. And then another thing I tell my buyers is try to put yourself in the seller's position.
Mm-hmm.
You know, let's say, think about if you were selling a home,
Mm-hmm.
what would you think is reasonable offer? And so go from there. You put in the offer, it gets accepted, then you start the escrow process. The escrow process is a process where a third party independent company holds a lot of the funds and does a lot of the paperwork to get the home sold. Two key important aspects in the beginning of the escrow process is having an inspection done by an inspection company, and then having an appraisal done. If you don't do those two things on time, that could slow down the loan process and it could affect your closing. So the inspection, that you have a person that's certified come in, check your roof, your plumbing, electrical, among other things, even the foundation. You don't want to crack the foundation. And you want to identify any items that might be needing repair and a high cost. You know, there's small things that for older homes, there's GFIC outlets that aren't installed. Some of those things you could kind of overlook and you could do it yourself, right? Because it's not a requirement, it's a suggestion. But other things like if the roof is leaking, if there's problems with electrical, a cracked foundation, if there's root intrusion in the plumbing pipes, because a lot of the older properties, 60s and before, might have cast iron plumbing. They erode and roots start growing inside of it, causing clogs and could cause bigger issues. If you find those items, you can ask for a credit from the seller to compensate you for having to fix it on your own, or have the seller fix it before it's sold. So after escrow opens,
Okay.
and escrow opens after the offer is accepted.
Got it. Okay.
And it usually should happen, both items, the appraisal and the inspection, should happen within 2 weeks of escrow opening.
Okay.
So that's the inspection process, which is very critical. In older homes, I suggest that you pay maybe $100 or $200 more to do a camera line through the pipes of the plumbing. And the inspection, it usually does come out of the seller's pocket, which is part of the closing process and closing costs. So the other thing is the appraisal. And so appraisal, kind of an independent appraiser comes by and values the home based on multiple factors. And what that does is kind of ensures that you don't overpay for the property. Let's say that you put an offer for $700,000, property comes in at $650 for some reason, you have an opportunity to negotiate a lower price. Now, one thing that I forgot to mention earlier is one thing that you can do while you're getting pre-qualified, and even now, even if you're not thinking about getting a home, is start saving for a home. You want to save at least 3 to 5% on a home for a down payment, depending on the size of your home, and also about 2.5% of that price of the home for closing costs. And going a little bit back, there's different types of loans that you could qualify for. If you're a veteran and you qualify for the loan, you could go for a VA loan, which has 0% interest, which is very beneficial. And also it doesn't include property mortgage insurance, which a lot of Federal Housing Administration loans, FHA, require PMI, private mortgage insurance, to cover the liability of the lender.
You meant zero down, right?
For VAs,
VA.
zero down for VAs.
Okay.
And so FHA loans, that's about 3% down that you could qualify for, or that you could put down. And you have to, the only thing about that is you have to pay PMI, which is extra couple $100 every month.
Mm-hmm.
And you have conventional loans, which is between 3 to 5 to up to, you could put 20% for investment properties, but as low as 3 to 5% on a home for conventional loans, which you don't have private mortgage insurance. So those are the type of loans. But so going back to escrow process, you do the appraisal, you do the inspection, and then the escrow company is going to be sending documents back and forth and getting all the required documents for signature from the buyer and the seller, both parties. And then they're also going to require at some point a 1% good faith deposit, and that is put into the escrow account to protect the seller in case the buyer doesn't want to buy the property for their own reasons. Not because there's a problem with the property or a problem with the process, but because the buyer just changes their mind or something that's not related to something wrong with the property. And so if that happens, the buyer or the seller is able to keep that one good faith deposit of 1% usually. But let's say everything goes well, inspection's good, appraisal's good, documents are getting signed, the loan is funded, so the mortgage company's involved, and on their end they have to fund the loan, and so that means that they're running all your finances again. You're qualifying you again essentially, and everything looks good. The loan gets funded, and then toward the end of the escrow process, the escrow company gets a notary, and the notary comes by to the buyer and has the buyer go through all the loan documents, the grant deed, and signing everything. And the buyer has seen all these documents previously, but these are final documents that are going to be notarized, filed with the county in which you're purchasing. And then once the documents are filed with the county, the buyer's real estate agent works with the seller's real estate agent to exchange keys, and then you have your home.
What would you advise a buyer in case, okay, they're so excited, they got their offer accepted,
Sure.
They went through the process, they're in escrow, now they give notice to their landlord saying, hey landlord, can we get out of the lease?
Right.
Because we just bought a home, we're gonna move in
Sure.
end of the month.
Right.
But the landlord said, no, you're on contract for 6 months, 6 more months.
Right.
So what would be your advice to the buyer?
So ideally, you want to plan around any leases or anything else. You might want to transition into a month-to-month if you're a renter. But technically, if you signed a contract, you are liable to that contract with whoever you have that with. My advice would be try to plan around it, of course, but if you find a home that you just love, you don't want to miss out on that opportunity. If you're renting, sometimes you have to eat that cost. I would talk to your landlord. A lot of times the landlords are understandable, especially if they're independent landlords, small mom and pop landlords. But I would give a notice sooner than later, and try to talk to them to see if you could work out anything so you're not losing financially. But if you have to eat up a couple thousand costs to get the home that you really want, sometimes that's the route you have to go.
I agree. Yeah, it's either you get this house which you love, or you might not find another one like it.
It might take a while. Yeah,
Yeah.
You probably won't find a one like it. A lot of
Yeah.
times, in my experiences, I really liked the home, and for whatever reason I didn't get it. I've never seen a home just like that. I might got a home that I liked better, but not like that. It's a little different.
Yeah.
Homes are unique in that sense.
Cool, good. All right, so what is your number one tip for negotiating a deal?
Have a good real estate agent that communicates well. I've seen deals kind of fall through because the agent on either the seller or buyer side didn't have good communication. But in my experience, the deals that have gone through for me was because I was always communicative to my buyer, to my client, and also to the other agent on the other side to get to know what's going on, what the needs are, and also to the escrow company when they're involved. We want to make sure that everything gets done as soon as possible, on time, and smoothly. Yeah, communication is key.
Good. How do you describe, okay, for example, when you ask the buyer, how much do you want to offer? And, right?
It's a fun conversation.
Yeah, and then they tell, just get us the best deal.
Right.
How will you respond to that?
So my job as an agent is to provide information and advice.
Okay.
And so I never want to push a client to a specific price. Like, you have to put this in. I don't want to put them in a corner. I want them to be relaxed and happy with what they're doing. I don't want them to come back and be like, oh, he told me to put this price in, right? And always blame me, because you're not going to get another referral if they're not happy. And so what I say, again, I go back to think about what they would do if they were the seller. And I also tell them I take a look at with my client, how much the property was bought at. How much equity has been built up from the time that they bought the seller bought it and the seller's putting it on the market. The more equity the seller has in the property, the more room for negotiations in most cases. And so a lot of properties pre-COVID, there's probably a lot more opportunity for negotiations with those sellers versus somebody who just bought it a year or two ago. So that's one thing. Look at how much equity is in the property. I always tell them not to lowball an offer. Unless you don't care if you get it or not, don't lowball an offer. If you really like a property and you really want it, it has what you need. There's always going to be some problems with properties, right? There's no perfect property. Even in new construction, there's going to be some squeaks, some leaks or whatever. But if you like a property and you feel like this is it, put your best foot forward. Don't lowball an offer, and make sure that you can afford it.
You mentioned like the prices have risen from many years ago.
Right.
So how does the younger generation who are about to graduate from college, they're just starting in their jobs.
It's tough.
Do they even have a chance to buy, especially in California, to buy a house?
You know what? I feel like if you really want a house or anything, if you put your mind to it, you can make it happen. It might not be the way you think it's going to happen, but you can make it happen. You might have to, put a little bit more grunt work in, but you could definitely make it happen. What I say is, these days, if you're single and you want a home, sometimes you might have to find someone that you really trust to go in on that investment. If you're not in a relationship, it might have to be a friend, right? And that's one route you can go. Of course, it's not ideal because now you're having tenancy in common, possibly, separating or percentage of ownership. And if a lot of times, if you don't get along with a person, even if you do get along with a person, there's a lot of baggage that goes with that, because if someone wants to sell and the other one doesn't, a lot of headache, right? But that's one option. You could go in with someone else to purchase a property. If you're single and you could afford it, maybe it's not a home, maybe it's a condo or a townhome, something a little bit less. Or maybe you buy in the suburbs or outside of the big city where it's a little bit more affordable, right? There's a little bit more commute in that sense if you're not teleworking and you have a commute to work, but that is an option as well for, you know, young home buyers. If you could get some gifts from a parent or someone as a down payment, that's another option that would definitely help in a young person or a new home buyer. And so there's a lot of options available, but again, I would utilize your real estate agent to think of those ideas. Another thing that you might want to look at as a new home buyer, young home buyer, is federal programs that are out there. You know, sometimes they give like 10% down toward your down payment, 10% toward closing costs, among other things. There's also fixed rate mortgages and adjustable rate mortgages. So fixed rate mortgages is you're gonna have 6% for the rest of your loan term. Adjustable rate mortgages, you're gonna have a low mortgage rate in the first couple years, and then it's gonna go up to a higher mortgage rate. And so the only thing you wanna worry about an adjustable rate mortgage is if you could afford the payment at a low interest rate in the beginning, but when it gets up to, you know, maybe 7, 8, 9%, and you're not able to afford it, you probably don't wanna take that mortgage. Or you would wanna refinance before the interest rates go up too high to where you can't afford to. The only caveat about that is you're kind of predicting the market and interest rates are gonna go down. In our current environment, that's where we're at, where, you know, interest rates jumped up after COVID, you know, doubled or even tripled in some cases, and now we're waiting for it to go down, and it is going down a little bit, so it might be a good time to do one of those adjustable rate mortgages. But again, that's not my area of expertise, and you want to consult your loan officer on that.
Okay, good. What is one thing that a house should have, in your opinion, should have in 2025?
Well, it depends on what you want, but in my opinion, it has to have warmth. When you walk in there, you have to feel like, oh, I love this place. I love coming home.
Warmth.
Warmth.
Okay.
Yeah, that good cuddly feeling inside your stomach.
Okay.
You know, it's always nice to have something new, right? Like a new countertop. A lot of the new construction homes have this huge countertop in the kitchen, right? I love it. Some people don't. A lot of the older homes are a lot more smaller, so they're not going to have a lot of those things unless they've been upgraded. But warmth. I feel like warmth, you can't go wrong with that.
That's good. It's good to know.
I would like to say one thing.
Okay.
You know, hesitation, and this applies to not just the home buying process, but it applies to everything in life pretty much. If you really like something, don't hesitate. You know, you have to move on it when the opportunity is there. And so what I mean by that is, you know, 20, 30 years ago, people were waiting for the market to drop, right? After 2008, home prices went up, people are waiting for the market to drop. It hasn't dropped, right? Not to the point that people are waiting. They hesitated when the opportunity was there, and now homes are out of the reach in some cases. So in this case, if you find a home that you really like, don't hesitate, if that's what you want. Some people, you know, home's not their thing. Maybe renting is better because they want to travel, they want to eat out, they want to kind of be, you know, spend their money without having to worry about a monthly mortgage. And so, if home is your thing, if you want a home, that's your desire, you know, the American dream, don't hesitate when you find an opportunity, because that opportunity may not be there in the future.
That's good. Good advice. I agree with that. Well, thank you so much, Jude.
Pleasure.
Appreciate your time today and sharing your knowledge. Look forward to sitting down with you and talk about selling a home. All right, thank you. And thank you to our viewers.